Hey snipers, and welcome to our weekly recap of a trade that we took on Friday, June 24. Actually, two trades I'm going to break down. One in London going into New York, and another one in right after Wall Street open. It was 6 of 6 scalps on the 1 minute candles, and it was roughly for over $10,000. And what we were looking for was about 10 to 15 pip range, trading inside a zone. So I'm going to break that down for you guys. If you guys enjoy these videos, make sure to hit that like, subscribe, and notifications so that we get these throughout the weekly, and you get our psychology behind why we take these trades. So this is the second trade that we took to sell. But before we got into that, let's break down the day how it was trading. So let's get into starting off with the analysis over here, so we can see how the market was moving leading into live London. So we trade live London with the snipers in our private room, and we go into live New York as well. So we were trading here. This is 3 a.m. leading into 3 a.m. So this is pre-London push down coming into London market. London market is 3 a.m. Eastern over here. So we were trading this. We took the first sell right here, and then we're coming down where we started to build this demand area. So we start to see a little bit of demand structure building into the market, and we started to see where there was an area of supply right up here. So it is building supply and demand. When you follow liquidity and see how it's being formed, then you can start to build an analysis with it. So we couldn't break below here. No volume was closing below. We were looking to short the market below here if we closed with some volume below, because maybe we were going to come down. NASDAQ was going to come down to 11,750 range. So right here is we're forming a double bottom, W bottom, where it came down pre-market London. We went right back up. There's our neckline where we pierced out of there, but then the candle closed as a sharp shooting star down. We had one more leg come down where we picked up this big bullish engulfing candle, nice liquidity grab where we closed above here, and we started to break out of here. This is where we took a buy entry with the snipers. We took this candle and we took it right up to here, okay? And now we're gonna continue to break down what was happening in London leading into the 6 a.m. buy. And we start to see where some supply is being developed right up here. So you can bring this structural zone across your chart because it is a static zone. This will remain static. The only thing that's variable is the liquidity volume in between trading through zones. If we get the volume above, this will build into a demand structure. So we can carry this across, and if we come and retest it at a later time, then we're looking for demand. So now we're building into 6 a.m. Okay, this is where New York market opens up. So here's 6 a.m. So this is where I got into another trade. I was starting to look at how the 5-minute volume was creating a little bit of supply, because 6 a.m. always has a volatile move in the market. It's considered to be like a London market open. There is a lot of liquidity that comes into the market when when New York is opening up. So what we're going to do is we're going to go down to the 1 minute candles walking into 6 a.m. because we were scalping the 1 minute candles. Okay, so we do the analysis on the higher time frames. I didn't do the full top down on here, but when we do our top down, we start off with the daily. We go into the H4 or hourly, right into the 5 minute, and then we can take entries on 1 minute as well. So these are the 1 minute candles. Okay, so we had our 5 minute demand and we've got our 5 minute supply. So you start to see that it came down. We're forming a bottom. Okay, so every single candlestick has its own characteristics, has its own open, high, low, close. They build their own patterns. Doesn't matter if you're trading 1 minute, 5 minute, 15, 30, 1 hour, H4 daily. It doesn't really matter. They all have the same common characteristics. And then now we can see that we're building a nice W bottom where we broke out. We came back down to grab liquidity. It was a false break. And then we come back up. And now we're trending, moving up here. So what I did was I analyzed where is my 1 minute resistance area right here. And what I did was I trapped all of this volume inside here. And I was looking for the bullish continuation break. So this is a consolidated zone where we came off the double bottom. And we also have bullish divergence. So this is what I was also noticing. While the market is trending down, we're making lower lows. our strength indicator, RSI, is actually increasing in strength. We're making higher lows. So as the market is coming down to pick up liquidity, our strength is actually increasing leading into 6 a.m. New York Open. So I had a bullish bias. I was just looking for volume to close above. And when we came above here, we came back down and we picked up nice liquidity. We stayed inside the consolidated box and we're building a nice trend on the 1 minutes, building higher highs and higher lows, higher highs. And this is where I entered into the market. So as it came up, 5:58, 5:59, 6 a.m. Here's the market open. It came down. Let's get rid of this so you can see here. It came down and picked up nice liquidity at a higher low. And as it was breaking out of here, I took 3 buys. You can see on the MT4, they were with 10 lots. So I went a little bit more aggressive with my lot sizing, but I was looking for about a 10, 15 pip zone fill. And I went in and I took 3 orders as it was going up, and then I added 1 more, then I added on the retest. And my target was to the left. When you look to the left of the chart, this is previous 1 minute structure. There was a double top up there with supply. So when we do our top-down analysis, you would have this in your chart and you would know where to possibly scale out of your position because we're coming up into higher time frame supply. So this used to be a double top M pattern that got rejected. So now we're retesting this area, this block order, and I started to scale up my position when we got into the block order right up to the highs of 11,833, and I roughly entered in at 11,820. Okay, so that was just a couple 3-minute scalps for a good amount of pips, quality pips, power of pips. And I want to break down the next sell that we have. So if you're looking at the MT4, you can see that we also had 3 sells, and it was roughly right after New York Wall Street Open. So again, if we start to go back all the way over here, when we were trading London, we can see London, we made a area of supply. Okay, so if I go back here on the 5 minutes, we can see where our 5-minute supply zone is. We can look across where we had those wicks, bring it across. That's where we got rejected there at 6 a.m. So that was the New York push, and it got rejected. We couldn't break and close above here. So we carry this supply right into Wall Street Open. Here's Wall Street, very powerful candle where it came back down, held down here. So we've got good demand holding all down here. So we had a lot of demand holding all of London, all of New York, and now leading into Wall Street Open, which is a very volatile session. Lots of liquidity is coming into the market. And we have a nice W bottom breaking out of here, where we have the resistance is right here. Nice bottom break, close above, consolidation, and now we push right through the gate. Where was our next high? Right here, 11,840. Once we clear this range, we've got a lot of imbalance we can fill up to the top because we have basically nothing over here to the left. We have to go to a higher time frame to actually see where we could go. And if you look closely, guys, this is the gap in the market that we had, which started on last week, the Friday and the open of Sunday. So there was this massive gap imbalance in the market to be filled. When you bring that across, then you can see that we started to accumulate in this area. That was the imbalance that we were accumulating in. And now they broke it out of that big imbalance in the market. And this is where we start to come up to test these areas. So we've got that area, and above us, we could get up to here. So when we go back to look at the charts, we pushed up very aggressive, 930, 945, 945. There was a slight pullback in the market right here, slight pullback, and we are continuing to push bullish. So this is a nice little consolidated flag where we push and we break out of here. Push, they cool off the market, pick up liquidity, new demand enters into the market, and they continue pushing this institutional move. You don't want to be shorting this move while it's still pumping out of the gate. Now it's 10 a.m., a new hourly candle, new volatility comes into the market, new traders come into the market, and they continue to push it up all the way where we finally get some good resistance up here. And what we do is we identify this area as a supply area. So we drew a supply in the market, okay? Because this was the first evident push down that was actually being rejected by multiple wicks. So when you follow liquidity and price action analysis, you can see that we pushed up bullish again and got rejected. We pushed up bullish again and got rejected. Now we're leading into a 10:30 a.m. candle, and that also brings in new volatility in the market. So what we're looking for is, where do we have some 5-minute support? Right around here, we've got 5-minute support that's still holding. So we're looking for volume to close below this critical demand support level. If you draw like a trend line, you're seeing that all of these wicks are lower highs, and we're descending into a triangle pattern, and we're looking to break this triangle and come down and pick up some pips over in the market. So what we do is I was scalping the 1 minutes. Let's go to the 1 minute time frame inside this triangle and break it down a little further. Okay. So it's always nice to do your higher time frame analysis. And when you're looking for entries, you can start to scale down the time frames. So this is what I saw on the 1 minutes. I had my analysis with 5-minute supply and now 5-minute demand. And now what I was watching was how the 5-minute candles, sorry, the 1 minute candles were reacting. The 1 minute candles were making their own lower high supply. So it was continuing to push down, lower high. Big bearish candle at 10:24, and we continue to push down. So this was when I took my first sell in the market, when it came all the way back up, and then it started to get rejected at this supply area. Because when you look at the RSI on the 1 minutes, there is a little bit of divergence forming. We have a supply came up to supply, came up to supply, and not really breaking here. But you see how overbought we were on the 1 minute, almost 90 on the RSI. So that is a very overbought signal. And we needed to see a little bit of relief in the market, maybe a small pullback. Okay, that's all I was looking for. Again, scalping this type of zone trading, I was looking for about 10 to 15 to 20 pips. I wasn't looking for big of a move because I was just looking for the power pips. That's why I increased with 10 lot sizes. And what I was doing was I was looking for the move from supply to come back to demand and maybe a possible break of demand. So let's just break this down. What happened here? I took one sell right here, 12,032, 37 area, added a, sorry, at 37, added another one at 32, and another final one when we started to break with the next candle, the retest, and continue to push down. And I started to exit the trade on this candle that was breaking because I don't know that we're coming into previous areas of demand. All of this is demand, demand, demand. So I was just looking for a quick counter scalp to the low, grab 10, 15 pips. Actually, one went for 27 pips, 28 pips, and another one was 13. So it was a very nice scalp move. It was very minimal drawdowns in all of the trades, very minimal drawdown, absolutely no drawdown, and went directly right into profit. Then what I did was I put my stop loss at break even and I started to scale out my position. So guys, that's a breakdown of 3 scalps on the 1 minutes we took around New York open at 6 a.m. and then another 3 scalps on a sell that we took around 10:30 a.m. Eastern in the New York session right after Wall Street. And it was almost $11,000. That's the power of pips when you're trading, and you can increase your lot sizes and take advantage of the market moves, guys. So if you like these videos, guys, drop a comment. Let us know what you want in upcoming videos. Like and subscribe to the channel. We are growing. We're growing fast, guys. We're going to give more education. Almost 36,000 subs, guys. Thank you very much. And make sure to watch our previous video and have a great weekend, everyone. Thank you very much.